Hi, friends. Thank you so much for joining into another great episode of the Money Minutes program, your favorite program, with your host, Seema Sharma. Today's topic is tax credit versus tax deduction. Tax deduction reduces your gross income, and tax credit reduces the taxes payable on your income. We're going to get into some details, examples as we go along this presentation, but I want you to know that these are tax topics and I'm not a tax expert. So if you need help with taxation, please do reach out to your accountant, to a tax expert. Thank you. So let's get started. We're going to talk about tax credit first. Tax credit is also used for a lot of state planning tax strategies for people that are retired. They have money in securities, investments, and they are concerned that if I left all this money that is going to have a lot of capital gain to my family, they will end up paying a lot of tax. So there is a strategy where you can take some of that investment, send that investment to a donation, to a charity as a donation, and when you get back a donation slip, you're able to reduce your tax payable. Well, if it's for estate planning, then it's not really for the person putting the strategy in place, it's for the person, it's for their beneficiaries. Anyways, that's another subject that we need to talk about soon, is estate planning. But today's topic is tax credit and tax deduction. So tax credit, once again, I want to repeat it because I want you to really understand the difference. They sound alike, right? Tax deduction and tax credit. Tax credit reduces your taxes payable. If I owe CRA $5,000 this year for my income tax, and I have $1,000 in tax credit, my tax payable for the year is $4,000 because that $1,000 is reduced by that tax credit. Okay, we're also going to talk about refundable and non-refundable tax credits, but let's look at tax deduction first. Tax deduction reduces my gross income. So if I am an employee of a corporation or I am self-employed, I make an income, and that income is my gross income. But from my gross income, I am able to deduct my business expenses, my RRSPs, my loans, loan interest, and bring my income down to a net level. A net income is what I pay tax on. I don't pay tax on my gross income. So to clarify this further, let's look at a few examples. I also have two of the calculators that I often use. I would like to give you that link in comments below so that you can play with these calculators yourself, put in your income, and see how much taxes you have to pay. You can change the province to see which province I am in and how much taxes I pay according to federal and provincial taxes. So I am going to share my screen. Give me a moment. It's better. Perfect. So we're going to look at, so tax credits can come from you donating money to charitable organizations. Tax credit is also age-related that CRA gives to each Canadian permanent resident or citizen, and healthcare credits. So money that we spend on our health and the money that is not really covered through our group benefit programs, that also provides us with tax credits. Tax deductions could come from business expense, they could come from RRSPs, they could come from leveraged loans. So let me explain a little bit about leveraged loans. So, if you want to go and invest money, but you don't have your own capital, however, you maintain a great credit, you have a great cash flow through your job and your employment or your business, then what a lot of people do is, okay, let me take $100,000 or $200,000 as a loan and invest it. Now, the reasoning behind you borrowing that money is so that you can earn better interest. So if you're paying 4.5% on your loan, you hope to make 8 or 10% on your invested capital. What you also need to remember is that this is a strategy for businesses, a lot of businesses. I take a loan, I invest it, and that loan interest is deductible expense from my business. That loan interest is also deductible from my earned income if I am an employee. So leveraged loans are great, but they're not for everybody. If you need more information, please put your comment down below so I can gather some more material and information about that. So leveraged loan interests are deductible. However, if you take a loan, if you took an RSP loan or a TFSA loan and you invested that money into RSP and TFSA, the interest on that loan is not tax deductible. Because remember, you're not paying any tax in your RSP account or in your tax-free savings account. All right, so loan for earning income earning property. So if you're earning a rental income from a property and you bought that property by borrowing from a bank like a mortgage or a second mortgage, interest portion on those mortgages and second mortgages is fully tax deductible from your income. And some of the student loans also qualify for loan interest deduction. There are many more things that you may want to read about, but here I'm going to concentrate on a few things only. Because if you end up talking about 50 different things, it becomes too confusing. So here's an example, and we're going to focus on the example on the left side here first, which is tax credit example. Income for the year is $100,000. Tax payable in Ontario is $28,000. My marginal tax rate at $100,000 is 43%. What that means is marginal tax rate tells me how much income tax is payable on the next dollar that I earn on my income. So if my income is $100,000 and my MTR, my marginal tax rate, is 43%, that means if my income goes to $101,000, that $1 will pay 43 cents into taxes. All right, so combined donation credit approximately combines, meaning the federal tax credit and the provincial tax credit that you get on donations is calculated as $2,000 on $5,000 donation. And I'm going to take you to the calculator and show you how I have done that. So the tax payable for that year for an individual who earned $100,000, donated $5,000 to a charity, got a tax credit of $2,000, tax payable for him is $26,000 as opposed to $28,000, because that $2,000 tax credit reduced the tax payable. Okay, now let's look at the right side of the same example, but for tax deduction. That, of course, income I have kept at the same level, which is $100,000. Tax payable, of course, same province, so we're going to look at $28,000. MTR is the same, 43%. And then deduction, what I've done here is I have put $8,000 into my RRSP and $2,000 I have received a slip for a leveraged loan interest that I've paid over the year. So total deduction that I have is $10,000. So my net income is actually reduced from 100,000 to 90,000. So I actually pay tax on 90,000 and not on $100,000. On 90,000, my tax payable is $23,000. So that's how these two, tax credit and tax deductions, make a difference in your taxes payable and net income that you pay tax on. I hope this helps you a bit. Some of you are geniuses. You know what? I got a comment the other day saying I felt like I was sitting in a grade 6 tax class. I'm like, you know what? There is no tax class in grade 6. I wish there was, okay? Some of the material that I bring out to you guys is too simple. However, I feel that, you know, if you share these messages with people that actually need explanations around these topics, my job is done. And I, as you know, I'm very passionate about financial literacy. I want to make sure that in Canada, we spread, financial literacy so much that, the concern that our government and people have in this country actually completely gets eradicated. So please help me. Now, let me take you to the two calculators that I have used here to calculate your income tax and your tax credit calculations. So let me move this camera to the side. So this is a charitable donation tax credit calculator. Don't worry about the year. Just make sure you pick the right province, okay? Because each provincial tax credit is different. Federal is the same for everybody. So I have chosen Ontario because I live in Ontario, and I put in $5,000 as my charitable donation, and I put in $100,000 as my earned income for the year, gross income for the year. And when I calculate what my tax credit would be, quickly it gives me $1,967. And of course, there is a disclaimer on the website to ensure that, if something has changed, they're not responsible. Great. But about $2,000 is my tax credit. Now let's go to income tax calculator. Just to stay with the same example here, we put in $100,000 as our income, and you can see that the total tax payable is $27,000 in this case. Now let me just quickly go and change this to $90,000 and see what happens to the tax payable. The tax payable in this case is $23,000, or your after-tax income is $66,000. All right. Hope this message helps you get clarity around tax credit and tax deduction. And I hope you like and subscribe. Please share this message with anyone who may be able to get some help out of this. Thank you so much and enjoy your day.